Global ratings agency Fitch has downgraded US sovereign ratings from AAA to AAA plus on the back of expected AA plus on the back of expected fiscal deterioration over the next 3 years, high government debt burden and steady deterioration in governance over the last 20 years. Obviously, White House and US Treasury are critical, not very happy with the downgrade. In 2011 as well, S&P downgraded the US ratings from AAA to AA plus for the first time in 70 years. We continue to have Rajesh with us at this point in time. I quickly want to understand from you, sir, what explains Fitch's rating and downgrade?
See, the huge debt which they have, almost 1 trillion of interest burden every year, that explains the kind of things. And the growth is faltering, high interest rate is again making the problems go, multiply the problems, I would say. And every time Fed increases the rate, the burden increases. So I think this is one of the reasons, and the poor governance which was stated in the report, maybe the other reason. So these are 3 reasons which have been triggered this downgrade.
All right, Suyash, we were hoping to discuss the impact this is going to have on the bond yields and money that will flow into Indian markets, perhaps, or perhaps Indian startups. And you had an interesting perspective coming in there.
So, Shweta, what happens when a downgrade occurs is that the debt, in this case US debt, it becomes less lucrative, because what essentially Fitch is saying that the chances of default for the US government are higher. So now when the debt or the demand for US debt falls, the prices will fall. But now, since there is an inverse relationship between bond prices and bond yields, the yields have gone up and yields have spiked up as much as 4%.
All right. I want to quickly also understand from you, Rajesh, are we hoping to see some of this money which has been parked with US Treasury bonds come into India in the near future? Perhaps startups which have been languishing in absence of enough funding?
I don't think so. It would be so fast. Maybe after some time it might happen, but not in the near future.
Not in the near future. What does it really mean for US economy?
See, US economy, I don't think major impact is going to be there, because it's already reeling under debt, and the bond yield has gone up over 4%. That would be a problem for a short term, but we should not forget that there were concerns of recession in the recent past for US, but it's not going into recession, it's going for a soft landing. And that's one of the positive which I look at through US economy.
All right. What impact is it going to have on US stocks? Dow was up 0.2% as of yesterday. US markets are yet to open up. But what sort of impact are you anticipating in the US markets and on Asian markets? We've seen a major sell-off in Asian markets at least so far.
Asian markets have already seen a sell-off today, and I think if it may continue for 1 or 2 days max, further going ahead. But as far as US is concerned, I think today it might open down. But again, as I said, earnings season is going on not only in India but in US also, and that will overtake the other sentiments.
So, apart from US downgrade today, we had seen that FIIs had turned net sellers recently. So, is it that the Fitch downgrade acted as a catalyst because the market was facing resistance at higher levels?
See, market has been going up since March lows. We have in March, July highs. So it's almost 10-15% run up from there. In fact, more than that. And it was just waiting for a trigger for profit booking. And this is just a profit booking. If you look at 5 months figure, every month we had positive inflows from FIs. So it's just a matter of fact that they resorted to profit booking in some of their counters. So it's not a major concern, I would say, unless, of course, the selling continues for some more days. That would be a concern. But then domestic investors have been quite a buyer in the market, and we have seen whenever FI sells, DI buys almost all the same quantity, because we should not forget that SIP inflows are continuously coming in the markets.
DIIs have been buying, and because of their consistent buying, the market, at least before today's fall, did not really witness any major sort of profit booking. So is it because of the Q1 earnings? What's giving confidence to domestic institutional investors?
See, Q1 earnings have been mixed. It's not that every company has reported very good numbers. Today, even we have seen Adani Wilmar giving out loss in against profit in the last quarter, year on year. So numbers have been mixed, but the management commentary of almost all the companies has been very encouraging. And this correction was waiting to happen, and this is giving an opportunity for medium to long-term investor to acquire good quality stocks. Somebody was feeling very spectacle going for some stocks at some prices, and today if it's you are getting a 10-15% down, then it's a very good opportunity, I would say.
All right, Mr. Rajesh Agarwal, thanks very much, sir, for taking time out. Suyash, thanks as usual for bringing all the updates related to stock market. We'll of course keep coming back to that big story.